All right, this is your monthly recap regarding AI jobs and money for February 2026. So, section one is markets move first and the big AI sell off. And so, earlier in February, the markets reacted to one big question that should have been presented a long time ago. What happens to profits in the whole economy if AI replaces more work than expected? And because of that question, we saw nearly a $1 trillion wipeout in the sell off of software and services stocks during early February. The Dow dropped more than 800 points in one session. Big tech names were losing market value as investors questioned whether AI spending will actually pay off. And so what matters here isn't just those numbers, it's the reason behind everything that's happened. So investors are still excited about AI, but now they're asking these different questions. Will companies actually make money from this, or will AI disrupt their own business models? And if you think about it like that, that's what we've been talking about on this channel, is that how AI can disrupt everything. If we just look at the driving sector and how AI can replace up to 3 million jobs or more, right? That's 3 million people that won't be buying Amazon products, won't be getting haircuts, won't be going to the doctor, right? This could potentially affect everything, and that's why we saw that huge wipeout. Let's hope that doesn't continue to happen, right? And just keep scaring the shit out of everybody. So who does this hit first? It hits software heavy companies, businesses that rely on seat-based pricing. And what that means is software companies that make money based on how many employees their clients have. And also teams tied to enterprise software budgets. What this does not mean is that a market drop does not equal a recession tomorrow, but when investors get nervous, hiring and budgets can change fast. And let's look at what's starting to happen. So the market is no longer rewarding the AI story alone. Now it wants proof, and that shift is going to matter coming into the next few months. So number two, let's look at Target's restructuring retail without actually blaming AI. But we know AI is behind some of these changes. So in the month of February, it looks like Target cut about 500 roles. And at the same time, it said it was going to invest more in store staffing and training. And that's important because it shows something that we keep seeing, right? Companies are simplifying their structure and pushing resources closer to the front line. So who was affected by these 500 job cuts? It looks like district level management roles and supply chain operation roles, right? And we've covered that with other companies where the supply chain and different levels of management are being replaced and they're no longer filling those positions. So who is safer for now? And that would be in-store frontline positions Target is actively investing in. So that's a good thing. So what this does not mean, so this wasn't framed as AI replaced those jobs, but the AI tools now available and that are in use makes company feel more confident about running leaner and not needing those 500 positions that we just spoke about. And that's a pattern that we're seeing more and more with these companies. But there is limits on that because it says here that restructuring can improve store operations and still hurt people losing roles. Both can be true at the same time. So section three, we're going to look at AI linked job cuts, fewer headlines, but one big signal. We can ask one question about February also, is that why didn't we hear about a lot of AI layoffs compared to what happened in January? And that is true. There wasn't that many viral layoff headlines going on in February, but late in the month, one of them did stand out. So a company called Block announced 4,000 job cuts, and their leadership is pointing to AI efficiency behind making those decisions. And that's 4,000 job cuts now put into the forever layoff category, which we keep hearing more and more about. There was also reporting that AI was linked to a portion of January's planned US layoffs based on challenger data. So that doesn't mean that AI caused all of them, but it does show that AI is now regularly included in the layoff reasoning. And who does this hit first? It looks like support functions. We have back office roles and coordination heavy teams. And what this does not mean is that AI is not the only reason companies cut jobs. There's cost control, there's overhiring, and strategy shifts are also real. But once leadership in these companies realize that AI can help them run leaner, then the cuts tend to come pretty fast after that. So let's look at markets and money and what February actually signaled. All right, so this is the key split for this month. So workers are dealing with restructures Investors still funding AI at massive scale. We might ask the bigger question is, if millions of people earn less, how does the economy still work? And that's the big question that we're all worried about right now. The honest answer is that the economy runs on spending. And if jobs weaken, demand weakens. And that's why AI job fear can cause a $1 trillion wipeout. That's probably not going to be the last one we see. You know, we can look at it as a buy-in opportunity, but at the same time, it's still scary. It's still terrible anytime something like that happens. So it's no longer a tech story. It's more of a circulation story, right? How are we going to keep the money circulating if more and more people are getting put into the forever layoff role? We're talking about educated roles down to driving roles, down to, you know, factory roles. Like, we need everybody to contribute to the economy. Like, that's why it's such a big deal. And so section 4, let's take a look at OpenAI and how they keep the money flowing. And if you didn't know, OpenAI is the company behind ChatGPT. So it says here, while markets were nervous, OpenAI was reportedly finalizing a funding round of around $100 to $110 billion at a massive valuation. And that tells us something clear, that even with job anxiety rising, capital is still rushing into AI infrastructure. And that's a problem because, right, like, these investors are going to respect a return on investment. That means that people will not be working eventually. Let's look at who benefits. It looks like cloud providers, chip companies, and data center builders. Who does not automatically benefit is workers displaced in restructures. What this does not mean is that this does not solve the economy. It shows money is being redirected, not evenly distributed. And the limits on this is that huge funding rounds increase pressure to scale fast and justify the spending on the new projects. All right, so section 5, let's take a look at Waymo and the human layer behind autonomy. So Waymo had an issue because Congress raised questions this month about Waymo's use of remote assistance workers. So basically saying, you're driving in a driverless taxi, but is it really driverless? Is there someone controlling it in a remote location? Those cheaters. Those cheaters. So where there's smoke, there's fire. So I'm sure they were doing something shady. So because of that question presented by Congress, Waymo said remote workers are not driving cars, but they do provide support. Really? And that matters because it shows how automation really works. And it shows that even driverless systems still need a person behind the scene, right? So you might as well just keep the person driving and just put the person in a green friendly car. Why replace the driver and put the driver in a forever layoff role? Why? If you can't already tell, like, I don't like this stuff. Like, I'm not a fan. And just real quick, check this clip out of a food delivery robot that got stuck in the California rain this month. Check this out. Right? Like, someone went hungry that day. Someone didn't get their lunch and they're pissed. Look, the robot's stuck in the rain, can't do anything. Come on, who's that? Coco? Come on, Coco. Come on, Coco. Like, if that was a person, that person wouldn't have went hungry that day. They would have got their lunch, been able to go back to work or do whatever they needed to do. But no. The little robot got stuck and that person went hungry. Maybe there's somebody controlling that. What this does not mean is that autonomy is not faked, but autonomy is layered. So the limits behind this is that regulation and public trust can slow deployment even if the tech improves over time. So for section 6, let's look at the humanoid robots. Impressive improvement, but not for everyday work yet. I'm not sure if you saw this or not, but there's viral clips going around out there about these Chinese robots doing crazy like martial arts and stunts to show their improvement in mobility and just their progress in what they're building. So it showed progress in control and balance, but stunts are not full-time labor, right? So real work requires reliability, safety, all-day uptime, and cost efficiency. So we're not there yet. So even though what we saw was impressive, like, they still have a long way to go. But it is alarming to see what those robots were actually doing. Like, we're looking at like Terminator kind of stuff, you know? Like, that's not a good thing. But the obvious direction is clear. Like, they're making progress, and just imagine if what we saw in February, just imagine 3 years from now, what those robots will be doing. So like, we just got to pay attention, man. So what actually changed in February? Markets started reacting emotionally to the AI job risk. AI funding still stayed strong. Retail and software companies kept restructuring. Automation stories showed more complexity than hype. What stayed the same in February? AI is still advancing. Job cuts are mostly restructuring, not mass robot takeover yet. Human backup still exists behind many automated systems, even though they don't want to admit it. All right, there's 4 things that I'm going to be watching for in March. Number 1 is, do markets calm down, or does AI job fear still grow? Number 2 is, do retailers keep simplifying management layers, meaning more and more job cuts? Number 3, do we see more companies openly tie layoffs to AI, or do we hear about more companies laying off and not blaming AI? Number 4 is, do lawmakers increase pressure on autonomous vehicle rules? And I actually did a video about what the government can and can't regulate regarding AI, and I'll link that at the end of this video if you want to check that out. Yeah, so overall, February was a pretty messy month. We had the big sell-off, we had companies still restructuring, we still have big money flowing into AI, with investors not sure if they're ever going to see the money back. So yeah, it's still looking a little messy out there, but hey, we're resilient and we'll see what happens with all this going on. And as always, I appreciate you watching, and I'll see you next time. Take care.